if silver really exceeds gold's performance, which I expect it will, you should look at a number greater than that. So taking a ratio of, say, 20 to 1, 15 to 1, may give you a better indicator of the potential, not the guarantee, price of silver relative to gold. But I do think it'll do better than 30 to 1 at the top. So if gold's 6,000 at the top, then 30 to 1 is $200 silver. If silver is 9,000, excuse me, gold is 9,000 at the top at 30 to 1, that's $300 silver. So you can project from there where you could see silver uh, when this market peaks out. Now, the trouble with peaking out is where are we in the currency wars?
Hello and welcome to Money Sense. Today we have honored to have David Morgan with us, a leading authority in the world of silver and precious metals. He is the founder of the Morgan Report, a trusted resource for investors navigating the precious metal space. With decades of experience, David has seen the ebbs and flows of the market, guiding investors through bulls and bear cycles. Today we will discuss how silver's dual role as a critical industrial metal and a store of value is evolving. We will also unpack what investors should look out for in 2026 or beyond. David's insights have helped countless investors preserve wealth. So get ready for an eye-opening conversation. Let's dive in and discover what's next for silver. David, first of all, thank you so much for giving us valuable time and sharing insights with us. Now, I'd like to ask you, considering today's global economic conditions, inflation, central bank policies, how do you see silver roles evolving in the coming years? Do you think it will remain primarily an industrial metal, or do you see its role as a safe haven asset even further stronger?
So, well, first of all, thanks for inviting me. Secondly, I'm going to talk gold and silver because they're really connected. The correlation between gold and silver varies over decades, correlation 80, 85%. And so I have a little bit different take than some. So let's just get started. So, from my perspective, we're not in a normal cycle. This isn't a gold bull market. This is a monetary transition, not a market cycle. Gold and silver are no longer just commodities, they are financial assets competing with all sovereign debt. The real question isn't if the metals are moving, it's how violently and who gets positioned correctly beforehand. The real driver for both gold and silver right now are global debt has reached levels that cannot be serviced. Central banks are trapped. They have to raise interest rates, and that will break the system. Lower rates to basic currency and just accelerate the problem. So I think even though Trump's got his new guy in for the Federal Reserve Board chairman, I don't think that he's going to have as much power as Trump thinks he has. Time will tell, but markets overrule the Fed action. So this is why central banks have been net buyers of gold at record levels the last few years, and gold is quietly becoming a neutral reserve asset again. Silver will never, in my view, regain total monetary establishment in the banking system, but it will establish itself as a safe haven status for the general public, sovereign wealth funds, fund managers, pension funds, and institutional investors. So gold and silver aren't just rising, currencies are being replaced. That's the biggest takeaway I can give you. So the industrial component will play a significant role in silver, but it's a static move. In other words, if you go back 25 years, the amount of silver used in the industry was 35% of the total market. Today, it's about 60% of the total market. What's fascinating about the doubling, not quite doubling, almost doubling in industrial usage is the percentages don't tell the whole story. Because 25 years ago, the amount of silver brought above surface by mining was 550 million ounces per year. Today, it's 850 million ounces. So what you really have to do is look at that 550 and take 35% and get that number. And then you got to take 850 and take 60% of that number and get that number. And you can see how much silver has increased in industrial demand.
Okay. As we just said, that central bank accumulating gold and silver. So, do you think silver will central bank also accumulate silver as well as just they are buying gold right now? So, what do you think about that?
I think that it's shifted back and forth. I mean, if you look at India back in, the 70s bull market, 70s to 80s, you look at India from 80 to maybe 2000 or so, uh, the masses were buying silver more than gold because gold was unobtainable for a lot of them. However, as India showed massive improvement in their economic standards, their standard of living on the whole, a lot of people got wealthier and were able to buy gold rather than silver. So you saw a shift the last decade or perhaps more, where a lot of Indians were buying gold over silver. However, that's sort of reversed now. Even though the country on aggregate is wealthier than it's been probably for a very long time, if forever, the qualities of silver as an investment safe haven and being really undervalued relative to gold has spurred new investment demand in India in a more sophisticated way. India has brought together one of the best ETFs on a physical basis known. And because of that fact, a lot more silver is being brought into India on an investment basis. And it's been connected to a Western style of type of investment, meaning an ETF. So rather than wearing it as jewelry, as bracelets or pendants or rings or chains or what have you, which still exists, and I'm in favor of that. But the more, let's say, urban, sophisticated, newer, younger investment class are buying it through ETFs, which is, fine with me. So that's part of the market that shifted. But it's not only India. China basically was the last to go off the silver standard, I think in the early 1940s, if I recall correctly. And they were burned during the Opium Wars, as many of the Chinese know, because the Chinese, for the most part, go back and know for their children are taught to go back 5 generations to not only learn their parents or grandparents or great great grandparents, but their great 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 grandparents. That's the kind of culture the Chinese have. So going back that far, they're pretty aware of the silver's monetary role, but that's kind of hushed up, kind of an open secret that no one really talks or knows about. The point I'm making is that the Chinese now have looked at silver as a safe haven asset, which they kind of dismissed for a long, long time. It's only been in the last couple of years or so where you've seen the Chinese at large start to consider silver as a safe haven. Now, prior to that, Hong Kong, which I don't really consider to be Chinese, it was mostly British. It's been given back to China, as we know. That's a different animal. And that's a lot of fund managers, high sophisticated investors. A lot of money moves in and out of Hong Kong. And they were more amenable to silver. And I know that because of the many trips I made in person to do lectures and investment conferences in Hong Kong. So what I'm saying is that the demand for silver as a monetary or a safe haven asset is only getting stronger, better, and more diverse.
Okay. Um, uh, just as a central bank accumulating silver, so what do you think about the delivery problems in the COMEX and the LBMA and the silver backwardation? Is it real?
I think it's overblown. I mean, I know many of my peer group continually put out information that's incorrect, and they talk about the COMEX is going to fail. All that has to happen is all these people stand for delivery, and then the COMEX is gone. It's over. It's kaput. Well, I've been hearing that for years and years. But if you look at the data and you actually can look at the truth is the amount of silver in the COMEX warehouses has been steady Eddie through 2020, it's been through 2020 to 2025, it's been almost a flat line. So all of those deliveries that purportedly take place are basically on paper. And the physical deliveries that everybody jumps up and down about are from bank to bank. So the silver sits and stays in the warehouse the ownership changes and all they do is retag it. But we constantly get, this misinformation over and over. Now, to be fair, this last year has been a little tricky because it's been a flat line from 2020 to 2025 through 2024. And then in 2025, we had a big inflow from London into New York for arbitrage. I think it started from the tariffs. Other people, such as Andy Schechtman, disagree. I don't know for a fact. I think all the data favors that the tariffs did spook the market, so they wanted to get the silver in there before they had to pay a tariff for it. That makes the most common sense to me. I think it fits Occam's razor. Andy thinks different. That's fine. Regardless, we know for a fact it moved, and it moved substantially. So the flow was a huge increase in silver in the COMEX, bigger than it's been for years. And then we got an arbitrage going the other way, and that silver left the COMEX just about as quickly as it came in. Now, most of it went to Asia, as far as we can tell. Some might have flowed back into London. So then we went up to this big peak and then took that peak down. And basically, from that point, it's remained flat. And so people talk about how small the silver inventory is in the registered category, which is the dealer inventory that can be moved. And it's roughly 77 million ounces. But I've watched the silver inventory in the registered category at 30, 35 million ounces, which is half of where we are now, for months. And there was no default. And the main thing is that the silver market is a derivatives market, not a delivery market. And what happens on all these rollovers in the delivery months is the paper moves, not the metal. Some metal does move, but it moves out and it moves in, and it moves out and it moves in, and it moves out and it moves in. Now, to be fair, I have often said that there could be a displacement at COMEX. Could it happen? Yes. Will it happen? Could. But the idea that every time that the amount of deliveries requested on the derivatives market is going to take the COMEX down has pretty much been proven to be preposterous. And the reason for that is those contracts roll over. These banks play the derivatives market. They do not play the physical market. Physical market's the last thing that takes place in the COMEX. And it's the last place you would take metal. If you are a silver user, in other words, an industrial user, you are going to take metal basically from the refinery or mining concern or something in between, smelter, refiner, or maybe if you have your own refiner, you could use doré, whatever. So in other words, the last place you're going to buy silver is off the COMEX. Now, if you're going to buy physical for, let's say, investment purposes, the LBMA actually does more of that than the COMEX does. So the amount of silver in the LBMA is, I think, around 800 million. Most of that is for ETFs, so it's already spoken for. The free float of silver in the LBMA is rather small, and the free float in the COMEX is rather small relative to the total demand for silver on an annual basis. What's interesting is how much silver from investors was sold between $50 and $100. And the answer to that is no one knows. But what I do know for a fact is that the dealers cannot move the metal. There's so much metal that was sold back during that time frame from 50 to 100 that they have got boxes that aren't even opened yet to inventory, test for purity, and put on the shelves in your bullion secondary market, or let's call it the retail market, your coin dealers, the people you hear on the web all the time talking about how they can't find silver and they've never seen the market so tight. The wholesale market has never been so flooded with silver it is right now for a very, very long time. The wholesalers are giving big discounts to the retailers just to move the product. And that is probably going to be temporary. Silver prices moved from 70 to 80 last week. The market's gaining traction. And the silver market is so so small that you could have one day you could be flooded with silver, as I'm describing, and that right now today is the case. and a month from now, it could be very tight market. Why? Because it's a very small market. All of a sudden, a big institution comes in and demands silver, and all of a sudden, refiners go on overtime to produce those 100-ounce 999 pure bars and 1,000-ounce 999 fine bars so they can meet demand for, let's say, industry and or institutional investors. So it's a very small, tight, can be very tight. So you go from, you know, quote unquote too much silver, meaning the wholesalers are financing silver, they hold in their shelves, they want to get rid of it, they want to square their books, they don't want to be upside down in the market, and they want to just do whatever they can to move product to where, oh my goodness, it's hard to locate product. We're not there yet. We're on the other side. There's ample silver for the retail investor. Now, the industrial side and the investment side, that's a little bit different story. It appears as if, as I said, LBMA is pretty tight. COMEX is fairly tight to about average. And the Shanghai market is where you see the real small amount of silver left in inventory. But there again, you got to think outside the box. You know, when we had that silver move from 50 into over 100, and a lot of trading was going on in the Asian markets, perhaps enough physical silver was shipped to Asia, the Shanghai Metals Exchange, to meet demand for a while. Perhaps a solar manufacturer, solar panel manufacturer decided they needed X amount of silver for the next 2 years, and they have that on the shelf right now at an average price of $80, and today's price is $80. So they're happy. They've got a price they think they can work with. And so there's a lot of factors into it. I'm still very bullish, but um, I'm not going to just go with the mainstream idea that we're running out of silver. I mean, at some price, someone's going to sell their silver. And have we been in a deficit? Yeah, we sure have. And does it mean anything? Certainly it does. But we were in a deficit from 1990 to 2005 inclusive. And we ran the silver market deficit down 1.5 billion ounces. And the market price hardly changed. But that was 20 years ago. And the reason that deficit was met by above ground supply that was depleted by 1.5 billion ounces and left perhaps 500 million ounces above ground, and the market hardly changed in price was because there was not very much awareness of silver as an investment, as an industrial need. Those conditions have changed. If you go back 20 years and see how many people commented on silver, there weren't that many. There was myself, Ted Butler, and some others, but it wasn't really thought about by any institution. Maybe a one-off here or there, I don't know about. But generally speaking, there just was no interest in silver 20 years ago. Today, there's a great deal of interest, as I said, in India, in China, throughout North America, even South America. I mean, there's a lot more interest in silver, and that makes these deficits more significant because people are paying more attention to it. But as far as above ground inventory that's available to meet the difference between supply and demand, it's still fairly substantial. So will it cause the price to go up? Well, what causes the price to go up is buying pressure. And the buying pressure at the margin, as we already discussed, and I want to reemphasize because it's the key to understanding this market, is investment demand. And that can change. It can go from, oh my goodness, you know, I bought silver at 90, it's now at 80, I don't want anything to do with it, to it's 120, making new highs in 130, 140, and everybody wants to buy it at the high. So I still think the highest priced silver and gold are ahead of us, but I do think we're going to see a trading range probably through the whole summer.
Okay, let's move towards the price discoveries. So, as you in past interviews, you said about almost $50 to $100 or triple digit silver. So, what do you think about if silver did triple digit or $100? What would the silver go after that? The extreme price targets from your perspective.
Yeah, for me, I think the extreme would be like 150 to 200. I think we'll
At the
get
end of
there.
year,
In
at the
what
end of
time frame?
at the end of 2026.
I don't think it'll be the end of 26. It could be. In fact, I hope it does. I think what we're going to see is, again, a trading range through the summer. So that puts us into like September. Then we break out past, let's say, 90, 95, get into that 100 range. I think there'll be a lot of retail selling at that point. It already made it to 122 or so intraday. And there were a lot of selling on paper, a lot of selling in physical. And I think people that missed that boat will be jumping on it. Like, I'm happy. I bought my silver. My average price is 20. It's 120. Last time it was here, it only stayed there for a day. I'm getting out. So I think you'll see it stall out around the $100 level. And whatever demand there is on both sides, buyers and sellers, when they match and the silver physically changes hands, then it'll move into very strong hands above 100 and we'll move up from there. But I think it will stall out. So where will it go from there? And no one knows, but I think at least 150, possibly 200. But that won't be in 2026. I'm looking more for 2027 or beyond.
Okay, is
I
it
know there's, excuse me for interrupting. I mean, there's other analysts such as Mike Oliver, which I have a ton of respect for. He builds a very strong case for silver moving, up to like three,
300 to
four,
$500?
$500. And I don't discount that totally, but we analyze markets differently. His momentum-based strategy and situation is very, very good. Again, great deal of respect. I just don't think our timings are different. And, could it hit 500? Sure it could. I mean, people said 600 for years. When a market really gets rolling in something as small as a silver market, if there's a true perceived currency crisis, I mean, you wouldn't be able to put a price on silver. And I've been pretty conservative. I mean, it looks like a nutcase when I said that, silver would be $100 or more back in the early 2000s. But I just threw a $100 silver party for my members in Las Vegas about a month ago because I said I would throw a party when silver hit the $100 level, which it exceeded. And so I'm no longer a kook. I've been vindicated. And that doesn't mean just because I believe it's going to hit 150 or 200 that it will, but I do believe that it will.
Some analysts also said that according to gold and silver ratio, silver will hit almost $1,000 or even $2,500. What do you take on the gold and silver ratio?
Yeah, first of all, before we get to 1,000 or 2,000, we got to get to 200. But no, I think the gold silver ratio is important. A lot of people poo-poo it, says it's meaningless. No, it's very meaningful. First of all, it's meaningful to find out if silver is cheap or expensive relative to gold. And you can be conservative. What we've already seen in this bull market is an intraday level of about 32 to 1, 33, 34 in that range, low 30s. And in a true bull market, we should see something better in that at the peak. So if we take that 30 to 130 number into the gold price, you should see where silver should achieve relative to gold as a minimum. And if silver really exceeds gold's performance, which I expect it will, you should look at a number greater than that. So taking a ratio of, say, 20 to 1, 15 to 1 may give you a better indicator of the potential, not the guarantee, price of silver relative to gold. But I do think it'll do better than 30 to 1 at the top. So if gold's 6,000 at the top, then 30 to 1 is $200 silver. If silver is 9,000, excuse me, gold is 9,000 at the top at 30 to 1, that's $300 silver. So you can project from there where you could see silver when this market peaks out. Now, the trouble with peaking out is where are we in the currency wars? Do you want to trade silver for fiat? And the answer is yes and no. That's a funny answer, but the answer is yes if you can cash out, get the fiat, and exchange it for a farm in Kansas that you've always wanted, or buy a business you've always wanted, or buy an apartment building you've always wanted, or whatever it is. I mean, if you've got an immediate use for that cash and turn it into an asset that you want, you've always wanted, be it a boat, be it a yacht, be it an airplane, whatever it is, it's your money. But you don't want to just turn it into cash and then sit it in the bank if we're at the top or near the top and we have a true currency reset where all currencies are revalued against gold or oil or something like that, or a new currency system with a CBDC, central bank digital currency, something like that occurs. So you want to be a little bit careful. So if you're only keeping your gold and silver for investment purposes, and I see a top, then where do you go? And that's a tough question. Usually land is pretty safe. Oil may still be a good investment. I don't know. There could be things perhaps in the stock market. Again, I don't know. But right now, the safest place to be for preservation of capital is the metals.
Okay, what do you think the best time for the investors to get into the market or get out from the market? And another one is that uh, how much do you think an investors to hold silver or gold in your portfolios?
Yeah, I recommend about 10%, 20 really at this point in time because there's so much problems throughout the financial system with currency debasement across all nation states. The war problem that's going on continuously, the instability of the political class through all nation states, and the oil situation, which means fertilizer and food. So I think 20%, but I'd say a minimum of 10%. If you don't have any exposure to the precious metals, now is the time. When's the best time to get in the market? Well, when it was cheap, $5 silver and $250 gold, which is when I started my website. But that was 25 years ago. You can't go back in time. So if you have no exposure, you should get some. If you're going to do 10%, I'd say get 5% now as a suggestion and wait. If the market goes up, go ahead and buy up on the way up. The professionals do that all the time. The momentum's in their favor and they're averaging up, which very few retail investors do, but the pros do it all the time. But as a retail investor, if you buy half now and it goes down, then you can average down. Right now, we're in a trading range for both gold and silver. And I think it's possible it most likely will break to the upside, but it isn't guaranteed. And so we could break to the downside for a while. I don't think the bull market is over. So there's no time like the present if you don't have exposure. If you're already exposed, then it's up to you to decide if you want to add or not. Some people want to rebalance, I mean, silver and gold were 10% of their portfolio, and they had such a run over 2025 into 2026, but now it's 30% of their portfolio. Some of those people might sell some gold and silver off and rebalance into real estate or rebalance in the stock market. I mean, it's their money. They can do with it as they wish. I would personally not move in either of those markets, real estate or stocks, unless I found an exceptional opportunity, because I think at the end of the day, we're going to see more about capital preservation than capital appreciation. We're going to get to a point where once the stock market starts to accelerate either up substantially, but the currency is being debased so quickly that the stock market doesn't preserve capital. That's an inflationary environment. Or where we could have a deflationary scare where the stock market sells off substantially and those dollars become quote unquote more valuable and gold and silver either go up or stay steady. So relative to gold and silver, the market's down substantially. So really do need some exposure. Again, you don't have to go, at a huge amount. You don't have to be half of your portfolio in precious metals. But again, 10, maybe 20%.
Okay, let's move towards gold. So, you have any price targets about gold as well?
Yeah, I think, 10,000 isn't out of the question. I mean, we've already been to 5,500. All the currency debasement still isn't complete. We still have more problems ahead that can't be resolved, even though there could be all kinds of rhetoric, talk, political action, legislation, all kinds of jumping up and down and screaming and yelling, but none of that will solve the real problem because you cannot fix a debt-based monetary system with more debt. It cannot be done. So due to that fact, we'll have to either the authorities will come up with a new system and force us into it, or ask us to come into it, or the market itself will actually come down into a new value system where things are repriced due to their true value. Either way, we're going to get to a situation where the monetary system has a major change. And because of that, I think we're going to see gold probably in paper terms valued at least 10,000. Now, remember, if gold's at 5,000, it's already been to 5,500, and the stock market goes down by 50%. What's the true price of gold at that point? And the answer is relative to the stock market, which basically is supposed to represent the economy, is it's doubled because gold has remained at 5,000, but the stock market has dropped in half, so that ounce of gold buys twice as much stock as it did previously, equivalent to it going to 10,000. I hope you catch my how I'm thinking about this. So we are in a situation again where you're going to see more and more dislocations in all markets. Gold is the major safe haven, not only for the central banks, but for individuals as well. And I think the gold story is far from
One more question. What about due to the current situation, uncertainty in the geopolitics, like US and Iran war? What do you think about the oil prices, and do you think world is moving towards another gold standard?
well, first of all, oil is the key. I mean, energy is the most important thing in the whole, you know, commodity sector. Without energy, nothing happens. And what's the most important financial asset is the U.S. Treasury market. I think oil is going to be higher. I think there's going to be a lot of stresses over the next few months, maybe much longer, depending on what happens with the Strait of Hormuz, the food supply, um, everything dealing with energy. So I'm very concerned about how this is going to play out. And what was the second part of the question? I'm sorry.
World is moving towards the gold standard.
Yeah, that I am. First of all, I'd love to see it. A lot of my peer group thinks that it's inevitable that we will go back on some type of gold or pseudo gold standard, maybe 40% backing, maybe a basket of currencies with gold and oil included, maybe a central bank digital currency tied to gold. I do not think that will be the initial reset. And I hope I'm wrong. I would rather see it tied to gold, but I think the initial reset will be at least set toward as from the central banks, as what Mark Carney said at the United Nations, the Davos or the WEF, World Economic Forum, and in Jackson, Wyoming at the Fed meeting. And they all was the same message. And that is that the Great Reset, the new monetary system, would be totally pretty much modern money theory, where there's absolutely no no backing, no gold tied to nothing, free floating, printing press, digital money. The physical currency supply will be null and void. So it'll be a cashless system, digits only, with programmable money that's not tied to any commodity whatsoever. That's the proposal that he's made at those three august bodies, I say with my tongue in my cheek, meaning the Fed, the World Economic Forum, and the United Nations. And that's where the power structure lies with the globalists. Does that mean it's going to happen? No, it does not. But as far as I'm concerned right now, on this day that you're asking, I think that's still what they want. Now, I also think they may, and I say the word may, I don't know, have a backup plan. And the backup plan could be that if that system is not accepted, it's rejected, or something goes awry, they might have a second proposal that does tie the system to gold. And I would consider probably a superficial way, but a convincing enough argument that the new system has a tie to gold, and therefore, it's more legitimate and everybody is okay with it, and the system moves on. So I don't rule it out, but I don't think it's the first attempt, and I don't think it's what the bankers want.
Okay, what's your last message for our viewers? Any suggestion?
Yeah, I think that this isn't about fear, it's about preparation. Gold and silver are not a speculation, they're financial insurance that's in a system under severe strain. And the window to position intelligently exists. So you don't have to, go all in right now, but you don't want to stay on the sideline either. So freedom and financial security ultimately comes down to one thing: owning money that isn't someone else's liability.
Okay, thank you so much. At the end, let me know how our viewers can reach you.
Yeah, I'm on Substack. I'm not even sure what it is. I just type in the Morgan Report. You'll probably find it. My main website's the best place. It's themorganreport.com. And I'm on X at SilverGuru22, all one word, at SilverGuru, SLVERGURU22. And I've got like 125,000 followers there. That's the only place I'm not shadow banned. My YouTube channel is shadow banned, Facebook shadow banned. Um, LinkedIn, I wouldn't say it's shadow banned. LinkedIn's a different animal, but the best place to reach me is through the website. Get on our free list. We have a paid service as well. You can check out if you're so inclined.
David, thank you so much for time here today. Your thoughts on silvers, gold, global economy, and investing were very valuable for our audience. Thanks you once again. And to our viewers, if you enjoyed this conversation, please like the video, share it with others, and leave a comment about this conversation in the comments below. David, thanks again for joining us. We hope you back you again in the future. Thank you everyone for watching. See you in the next video.